Hey everyone, welcome back to Corporate Decoder, the place where we dig into company filings so you don't have to. Today we're cracking open CECO Environmental's latest proxy statement, and believe me, this one's got more than a few interesting twists that might just leave you scratching your head. Think executive paychecks, board member perks, and a few surprises along the way. CECO Environmental, if you don't know, is all about protecting the planet. They sell systems that help other businesses control air pollution, clean water, and deal with energy transition. So, let's dive into this filing and see if their actions match their environmentally friendly mission statement. First off, mark your calendars. The annual meeting is on May 20th, virtually of course. You can attend online, same rights as being there in person. This year, they want you to vote on electing 8 directors, giving thumbs up or down on how well their executives are paid, and picking how often you want to do that executive pay vote. Every year, every other year, or every 3 years. Plus, they want to rubber stamp their accounting firm for the year. The top dogs are saying they smashed records in 2024, highest revenue and profits ever, as well as big bookings and growing sales orders in the pipeline. They are really pushing global expansion and put in the effort to keep the operational performance top notch. They did multiple acquisitions and also sold one of their business lines. According to them, all this effort to grow resulted in the company stock greatly outperforming industrial peer group. Alright, jumping to who's on the ballot, it's 8 familiar names including Jason Dezawyak, the chairman, and Todd Gleason, the CEO. They have different skills from operations and technology to finance and law. It's your usual mix of experienced folks making the big decisions. Some serve on compensation, nominating, and governance and mergers and acquisitions committees. Robert E. Nowen chairs the M&A group, for example. Board is obviously recommending voting for all 8. Looking at the attributes they want on the board, everyone has an executive background and also an international experience. But cybersecurity experience is on the lower end at 38%. Worth pointing out that a director can't sit on more than 4 public company boards. They need to focus. Also, the CEO needs to hold stock worth 5 times his salary. Other execs need 3 times their salary worth of company stock. Time to peek at some numbers. Revenue's up a bit, 2% to $558 million. Orders, which are the sales they're making that will turn into future revenue, also up 14%, which looks solid to 67 Backlog increased a whopping 46% year over year. However, the free cash flow took a nosedive, down 80%. Adjusted EBITDA, the earnings before interest, taxes, and other non-cash accounting items, increased 9% year over year. However, the free cash flow took a nosedive, down 80%. Adjusted EBITDA, the earnings before interest, taxes, and other non-cash accounting items, increased 9% year over year. Non-GAAP EPS decreased a small amount. These are non-GAAP measures, so a table reconciling them back to the real GAAP numbers is provided at the end. Switching gears to executive pay, it's worth noting the company is weighing the executive compensation programs against similar companies. Performance is heavily based on adjusted EBITDA and revenue. They also use things like stock and stock equivalence ownership. If the company needs to restate any accounting statements, they will use clawback policy to get some of that money back that was based on faulty accounting. Okay, how about the directors? Non-employee directors get an annual retainer of $62,000 in cash plus $140,000. In chairing the audit committee gets you $30,000, and chairing the audit committee gets you $30,000. Looking at the directors' pay table, Chairman Dezawyak is topping the chart with over $300,000 total compensation. Then you have others like Wallman, Noling, and Seigel, each pulling in over $200,000. Now for the main event, executive compensation. They have a compensation committee doing the work. There are 3 top executives, CEO Gleason, CFO Johansson, and Chief Legal Officer Watkins, the CNB. The committee says they want to remain competitive and align with long-term interests. That means paying for hitting targets and using stock, so the executives want the stock to go up. CEO Gleason got a base salary bump from $525,000, $325,000, $25,000, and $26. Johansson's base up almost 15%. The board approved the raises because the company has grown and they wanted to stay competitive and big. The annual bonus depends on hitting targets of adjusted EBITDA and revenue. For 2024, they hit 40% of the target payout. That means CEO Gleason, for example, who had a target bonus of almost $1 million, only got $382,656. They also get stock in the company that vest over time and some performance-based stock that only vest if they achieve returns for the shareholders. The CEO got some stock options as well to tie his pay more closely with company stock performance. Looking at the equity compensation, Gleason's target was almost $210 million. For Johansson, it was around 500k, 70k, and the chief legal officer had 500k. Worth noting here that the stock amount of stock options the CEO received were under the target. The company admits they messed up the option calculation, but they said they'll fix it later. The performance-based stock depends on relative total shareholder return, so they are measuring how they did against a peer group. We can scroll to the appendix at the end to see a list of peer companies. But generally this is similar size industrial and materials companies like Terex or Cadont. We can also see the company accounting fees. It paid BDO around $1.5 million for the integrated audit. If you want to tell the board your opinion, you can write to the chairman, and the company put in the effort to write all these disclosures about that. Looks like some people in the company forgot to file some trading reports in time, but company said it was just a simple administrative mistake. So what's the overall takeaway? CECO Environmental appears to be walking a fine line between rewarding executives and aligning pay with actual performance. It looks like a lot of big changes are happening, so the executives are working hard. While revenue is solid and the future seems secure with an ever-growing backlog, free cash flow is worrying. The success hinges on tapping into multi-year growth trends they've spotted, like energy transition and infrastructure projects. However, execution will be the key. Lastly, I will be remiss to not point out the CEO pay ratio, you know, how much the top guy makes compared to the average worker. The ratio is 44-1. The CEO makes 44 times more than the average worker. The average worker makes around $70k. The CEO makes $3 million. That's all for this deep dive into CECO Environmental's proxy statement. Let me know what you think in the comments below. What looks solid, what seems shaky? Don't forget to like, subscribe, and hit that notification bell for more corporate decoder content. Thanks for watching.